All right, sorry about that. I had just something quick came up. I just had to deal with it real quick. Nothing serious, but just something I had to do real quick. So anyway, coming into today, mostly sideways, and as we can see, we're here daily chart. We've gone up just an incredible amount ever since the start of July. And if you've been paying attention to Al's, you've been in Al's trading room, you've heard him say many times that you know this is so much up. At some point, yes, it's climactic, but at some point, traders will have to reduce their position size. They'll have to reduce their risk, and the only way to do that is by reducing the position. So I think we'll pull back. How many days? Probably 3 to 5 days. If we look at, you have to think about it this way. Weekly chart, 3 consecutive bull bars. The Bears were able to put a big tail on top of on Friday on the last week's close. However, it's still 3 bull bars. The first reversal down will fail. So what do the Bears want? The Bears, obviously, they do not want this week to be a bull bar. Personally, I think we're going to have a weak close or a bear close. Now I'm not condoning or saying, I'm not suggesting to just sell right now and hope that this week's bearish, because it could be just as simple as this, and you got to ask. But I don't think it's a great trade. The Bears want a close down here. Ultimately, if they could close this week all the way down here, that would do a lot of damage. Realistically, it's going to look like this. Ignore this, but bull bars, pull back, and then a rally. Bulls will buy the first pullback. 60-minute chart, we've been going sideways for a few days. We're pulling back. The Bulls really, here's what the Bulls need to do, and let me put it in terms of, let me give it in terms of a, well, here. Just let me turn off the screen for 1 minute. All right, again, sorry about that. So let's just use, we'll use the Euro Japanese yen. We have a bear breakout. We've been in a bear channel. The odds are this is exhaustion, and we'll at least test up to here. Notice what happened after the breaks itself. This is the daily chart. We went sideways for a number of bars. So at some point, when you get a breakout, the pullback is what determines the market cycle, and I'm going to go over that more in a little bit. So what I mean by that is, when you get a breakout, if it's a really strong breakout, you'll give the market more time in a pullback. However, once the pullback starts to last for 20 or more bars, the pullback becomes a trading range and the probabilities become 50-50. So how do we relate this to that chart? To this chart, you get a bear breakout. We've been pulling back for a very long time, 15-ish bars. Look, this looks like more of a trading range, and even if we sell off, we'll probably bottom. So I think we're going up here. So, it's similar to, I'll go back to 60-minute chart. If the Bulls can get sideways, if the Bears can make the market go sideways for a really long time, just say 20 bars, then we've got a very good chance at a sell-off and a reversal. But unless the pullback lasts a while, the Bears, this will be a bull flag, more likely than not, at least a second leg up. You can see, similar to right here, we got a strong rally, sideways for quite a few bars. So the Bulls and Bears believe that any breakout above would be a final flag, and we would test back down. That's because Bears are shorting. A good example of that was crude oil today. If I can find it, here we go. So just go to the 15-minute chart. So we went sideways overnight. We had a strong breakout uh, early this morning, and you can see we had a breakout, but we followed through. So this is a delayed pullback. The pullback's lasting a long time, and we're starting to sell off. However, notice how disappointing the pullbacks are. That increases the chances that bulls will buy this low and buy more lower. So what's one approach to that? One approach to that is, let me just paint this real quick, draw this line to show what I'm saying. Let's say a bull buys this low. Some bulls will just get out. Others will wait, and they're going to wait for a bull bar. Will they buy here? They might. But if they buy here, they're going to use a very wide stop because they know the market's going to have to go sideways before we get a strong bottom. So right here, we get a low 2. So we'll probably test back in this range. We get a bear breakout. And then we go sideways for like 10 bars. And we got a nested low 2, you can call it a wedge. That's a good sign that any breakout below will bottom. So here is where a lot of bulls, this is where you want to buy after the market proves to go sideways, and then we ride back up. So anyways, let me get back to the Emini. So coming into today, strong sell-off, pretty disappointing pullback. This pullback lasted for a long time. So, it's possible we get a leg 1, leg 2, maybe something like this and that, but probably won't get it because that's a pretty big move. So, really, we had a spike and a pullback that lasted just too long. Before I go into the bar by bar, we had a spike, a breakout, but we followed through. You can see a lot of tails on top, and again, I'll go more into this in a few. And then notice right here, so we're starting to pull back. Pull back to 4 bars, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. So about here, we pulled back to 15 bars. At what point will bulls start to agree that we're in a trading range and not a pullback? Again, trading range is a pullback that has lasted so long that the probabilities have become closer to 50-50. Now, just because you're in a trading range doesn't mean, just because the bulls may agree that this is a trading range right here, does not mean that they're going to just simply give up and the bears are going to short across the trend. All I'm saying is, in order to reverse the market, you need a trading range here. We sold off, went sideways for a lot of bars, sold off again, started to go sideways again. It's a good sign that we're forming a trading range, and any sell-off will come back into the range. So I'll explain that further in a few. But so bar 1, arguably it's a double top here, but you got to question the big tail on bottom. And will the bulls make money buying below bar 1? So bulls will buy this. Big tail is 2 doji, probably a trading range, but always in short. If I had to do anything, I'd be short, stop above bar 1. Decent bar 3, definitely always in short, but you got to ask why the big tail. Testing yesterday's close. Disappointment, trading range bars, big tail. We're probably in a trading range, and I still think bulls will make money who bought this low. Doji. So we're starting to pull back, and then we get this bar. So at this point, you have to weigh the pullback with the breakout. So if you're a bear and you're short, you have to be worried about an opening reversal, especially on the morning. Because of this, they're going to give the market less time when it comes to pulling back. So you're already disappointed by this. We failed to break out below these lows. Possible, we're just channeling up. So when you see here, you got to question, we're probably still always in short. Bulls probably need one more bar. But, some bears will get out above this bar. They'll get out on this close. Bulls achieved their objective. They got back to the bar 1 and 2 lows. So it's important to see what they do here. And as you can see, we only pulled back 1 tick and we got another bull close right here. So probably always in long. And if I was a bear, if I was always in short, I would get out probably on this close. If not, they have to get out on the next bar. So right now, clearly always in long, but stop all the way down. So down here, so if you're buying, you need a wide stop, and you need to trade small. You have to be aware of this big tail. We had this, similar to over here. We've had this a lot of days. So this kind of reminds me of this day a lot. Sold off, and then we just got a big breakout, but we only closed one tick above this high. So you have to be aware of this possibility. This may simply be a pullback in this bear move. So it's important to see what the next bar does. Bulls want to measure move up, and they want a small pullback trend. But you got to ask, why do we close one tick above this high? So bad follow through as expected in a trading range, but big tail still probably buyers below. Let me get some water real quick. All right, and as you can see, it did not trigger, but again, you have a high one buy at the top of the trading range. Not a great buy, but we're still always in long. I'd rather be long than short, and we're probably going higher. Sorry, just one moment. Okay, sorry about that. So here, clearly still always in long, but best bar of this move, so you have to question, is this an exhaustion gap or is this a measuring gap? Probably exhaustion. Bulls really want to get above the top of the sell climax here and here. Always in long, maybe a measuring gap, maybe more up. Here, still tight channel, so best the bears will get, at least initially, is sideways. But again, why are we getting all these tails? This does not have the look of a really strong trend. It is a trend. So if you're selling, you need a wide stop. What's wide? Probably up here. We could easily just, if you put your stop up here, as you can see, we can easily trigger it and then turn down. So it's really not that simple. Possible trending trading range day. So the start of the trading range may be in this area, maybe here. We may test down to these lines, either up here or down here later in the day. But as of right now, the only thing I'm willing to do is buy. So again, parabolic wedge, first 1, 2, 3. Doesn't matter how you look at it. Right now you have a high one buy after another buy climax. We're probably going to pull back soon. Starting to pull back, but again, still sideways, possible final flag. So at this point, right here is what I'm talking about. It's kind of like down here. It's a final flag, and you have to be alert as to how far and how long the pullback's lasting. As of right now, about a 30-minute, it's about 7 bar pullback. So you have to question, is this a bull flag, or is this going to be a trading range? And if it's a trading range, we may get a very deep pullback, possibly all the way down to here and close this gap. So it's okay to get out of shorts, or excuse me, okay to get out of longs. I would not go short though. But again, tricky. It's still a little tricky. This is a big trend line, so first reversal down will probably fail. You can get out here, but if they do, if you're a bear and you get out, if you're a bull and you get out here, I think you got to get long above here. Again, that's not easy because it's forcing you, to buy on a big bar and not a great signal bar. So right now, pretty disappointing pullback, probably in a trading range. We just touched the moving average in about 20 bars, so there's going to be buyers. And then right here, this bar is important. I think a lot of always in bulls get out here, and the reason I say that is, they could get out. They probably got out here, and I'd say 50-50. You buy again, or you just stay out. But if you're long, you need to get out here. And the reason why we've been going sideways for a lot of bars. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 17 or 18 bars. We've been going sideways. And more importantly, look what's happening. Bulls are buying closes, scaling in, and scalping out at the high close. That's trading range price action. A trend does not do this. A trend, you buy closes, you scale in a little, and then we go higher. More bulls buy. So bulls are selling high and taking profits. That's a sign of a trading range. Try to get out here. Going sideways, going sideways. Do bulls buy again up here? Probably. You can argue a triangle, first push, second push, third. So it's a reasonable buy, but probably a final flag if we trigger the buy and go up. Of course, we did not. So when you look at this bar, it's a surprise bar, and the reason for that is just what I said. Triangle. So a lot of bears will probably get out above these bars, and a decent amount of bulls will probably go long. You argue double bottom, logical target above yesterday's high. So it's a surprise bar, and the question is always, for one, the first question is, excuse me, will the bears get followed through? They did not, and they got disappointing follow through. So trading range price action, we now have a wedge. So trading range price action, bulls want a wedge full flag. So okay signal bar, but you got to question the tail, and most importantly, you got to ask yourself, is this a strong enough breakout that will get a second leg down? Will this bar warrant a second leg down? So if I buy above, I'm going to use a wide stop, and actually I did buy above this bar, and I used a wide stop. If you're going to use a wide stop, if you're going to buy above, I would not put my stop below this bar because it's a wedge, and in a trading range, whenever you have an obvious stop, I'll put it this way, usually 50-50 chance that stop gets hit and we go for a measured move down. So like right here, we went up and we broke the stop. So at this moment, 50-50 chance in general that we will trade down and go for a measured move. 50-50 chance we get a buy signal like we did here, and it's just a failed breakout of a wedge. So that's what I'm talking about when you need the wide stop. If you're buying above, I'd use the wide stop at a minimum below high bar 1, so somewhere down here at a minimum. If I was short, I would definitely get out of longs above here. The bears had a chance at a bear breakout, they failed, and I think we'll at least get back up to this high. We may even get a new high on the day. But very disappointing pullback. This is probably a trading range. Bulls will probably take profits up here. So we're probably no longer in a trend. But if we get a breakout of the trading range, I think it'll be more likely up than down. And you can see what we got. So at this moment, again, same situation. Maybe this is a wedge. It's really never that clear. First 1, 2, 3. And you can make the argument that this is the wedge right here. So first push, second push, third push. And this is really just, a nested third push. Computers will see it as 3 pushes, and that's really all that matters. It doesn't have to look perfect. You just need to understand that's 3 pushes. So when you see this rally, you have to think about, number one, bears are making lower highs and lower lows, and if they do that for a long time, we could easily get this, and then let's pull back and the bear breakout. We're probably not going to get it, but you have to be aware of it. You have to be aware of the big tails on top. Bulls are not doing what they need to do. However, bear breakout. The first problem with this bear breakout is, number one, we're probably still always in long based on this rally. The best the bears probably will get is a trading range. Well, trading range, you want to buy low, sell high. We're low. A lot of bulls will buy this close, betting that the bears take one more bar. So, it's really good math if you think about it. because number one, the bulls did not have a good signal bar to exit, so and the bears didn't have a good signal bar to short, so you have a lot of trapped bulls who did not exit, and now you know they're trapped at the bottom of the range. So does it really make sense if they sell to long here, the very next bar might be a bull bar and they have to get long again. So and the odds favor disappointment. So for the bears, let's put it this way: if you're flat or long, it makes a lot of sense. Let's say your stop's down here, and let's say you bought above this bar. Now you're short, you're long. You bought above this bar right here. Now you're holding losing position, and your stop's down here. Well, it actually makes a lot of sense to actually just double your position if you can tolerate the risk and get out if the next bar is a bear bar, a strong bear bar, and you can see it wasn't. This also happened in crucial, and this happens a lot in a trading range day. Right here. So we had a rally, probably at least second leg up, probably enough sideways to consider this a trading range, and even if we get up to here, we probably will not get leg one, leg two. We got a bear breakout, bear follow through, but we're at the low of the range, low of the trading range. So the bears probably need one more good looking bear bar. For instance, if they can get something like this bar, or this bar, a lot of bulls will get out. And you can see, look what they got. They got a bar that was very disappointing, and bulls bought it. So, same thing. 3 pushes down, 1, 2, 3, 1, 2, 3. So, doesn't matter how you look at it. You can really call this a high 4 if you want. We got a high 2, high 1, high 2, bear breakout, and 2 legs down. So bear breakout, 1, pull back 2. Or you can just say, 3 pushes down, and a bear breakout of a wedge. But anyways, if I was short, I'd definitely get out above this bar. And you can see micro channel, but pretty disappointing on the way up. I still think the first reversal down will fail. Okay to get out along here, but I'd probably wait. And this is what happened. So I'd probably get out below this bar, but never triggered. Bulls had a chance at a breakout. They failed. Definitely get out of this bar. The Bulls had a high 2 buy, so high 1, pull back high 2, and they failed. So it's a pretty decent low 2 short and betting. You call it a lower high major trend reversal. You call it a double top lower high major trend reversal. And that happens a lot, where you get, I wonder if we had any recently. Kind of here, double top, you can call it a lower high. No real good examples right now, but where was I? Yeah. So it's a lower high, double top, maybe trend reversal. However, reversals lead trading ranges, so the bears are going to be quick to get out. Great looking entry bar, bad follow through. So a lot of bears will get out above. Always in bulls get out, but they probably got to get long again here. And we're rallying up. Biggest problem of the day is, once again, we're just not breaking above this trading range, and it's disappointing for the bulls. Eventually, they're going to give up. And as you can see, we tried to break out, we failed. We tried to break out again, and we failed. At this point, late enough in the day, if I was a swing bull, if I was a bull, I'd get out below this bar. Very aggressive short because of the tightness of the channel. And as you can see, stop entry bears have not been really making money. Maybe here their entry was 60.25, so they needed 59 even, and you can see it was a 5-tick failure. It went down 5 ticks and trapped the bulls. It trapped the bears who went short. So bears are not making money below bars, so you really want to bet that this is the time that they'll make money. And, everyone's looking for buy the close, sell the close at the end of the day. When you're sideways for this long, you just really don't get buy the close, sell the close that often. And especially by, 14, 45, or, 12:45 hours time, 2:45 Central Time, pretty much 30 minutes, around 30 minutes before, 15 minutes before the New York Stock Exchange closes. You just don't really get sell to close. And here we ended up getting sell to close, but it only lasted a few bars. And you know, selling here, it's pretty easy to get stuck. So personally, I wouldn't take this home. It's worth it. So stop entries today. I think it's always in short. It's okay to sell below, but you got to be where it tells. Here, it's okay to buy, and here, it's really buy the market, buy the close. As terms of, you know, really, I mean, buy anywhere in here. There's not really good stop entry forcing you to buy for behind the range, but it's okay stop entry. If I bought it above, I'd probably get out below this bar. But then again, do you buy above here? Probably. So let me just do this in terms of always in. That's primarily how I trade. The sell below, the sell to close of bar 2, sell to close of bar 3, but very risky with the big tail. You get out either above this bar, this close, or this close. You have to get out above bar 1 because of an opening reversal. Always in long, buy for any reason. Stop down here. Hold short. Don't get out here. Maybe get out here, but if you get out, you have to be willing to get back in, knowing that the first reversal down will fail. If you get out, I'd get in above here. It's hard to do, but I do it. But if you do, you got to be thinking trading range, and you probably need to get out here. Unless you want to, if you're not willing to get out here, let me put it this way: if you do not get out here, then you've got to understand that there's a reasonable chance we'll get all the way down to here and still stay always in long. So if you're willing, that's a great thing to do if you can scale in. You just hold, and just buy around this bar. It's kind of like in a small pullback, kind of like this. When we test the moving average, you just buy. You don't have to get out here. You can hold down and just buy more and then get out all up here. So, I'd get out here though. Bulls buy again up here. And also, I want to point something out right here. This is always a very kind of fascinating thing that happens. So, you have an obvious target, the bar 1 high. Trading range day, bears will sell with limit orders, and they'll sell everywhere. They'll sell above bars, they'll sell below bars, sell bull breakouts, buy bear breakouts. It's reasonable to sell this high betting it'll fail. So let's say a trader sells this high, and they wait for a decent stop entry to buy. It's kind of like what I said with crude oil earlier. So you sell this high during this bull breakout, and you wait for a stop entry. At this point, you're probably saying, uh-oh, maybe I just want to get out of break even. Not a great stop entry short. Here's a decent one. I'll short this one. Look what happened right here. So many bears wanted to get out of break even that a lot of traders bought. Could not get out of break even. Another stop entry. And clearly we're broke below it. Bears made money. If you really want to think about it, that's interesting. So if you're a bear, 57.25, 57, yeah, okay. So bears who sold this high and more higher could not get out of this high. They only got filled at their first entry. When I say that, you don't have to sell as high. Plenty of traders, think of it this way. You say, okay, I know bears will sell as high. This doesn't look strong. I'm going to wait for a good bear bar short, and I'm going to target that low. Target this high. Plenty of traders do that. Price did not go one tick below, so you have trapped bears. And as you can see over here, the bears who held trying to get out at their original entry did not, and they tried to get out of break even right here, and they failed. So they got trapped. But of course, at the end of the day, they got out. So yeah, anyways, bulls buy again above here or above here. Really, they hold till the end of the day. They probably get out below here, but then they buy above, and then they get out here. So I'm gonna now open it to questions? Should be a question box up now. All right, just keep asking the questions, but I'm going to go ahead and answer them as as I see them. So at the 10 a.m. pullback, strong bulls won't get out, but wait for retest of prior extreme at 11 o'clock. Okay, so at 10 a.m. So at 11. Whoops, okay, so let me just say something. I don't know if you're talking about 10 a.m. Central Time or 10 a.m. Al Brooks time, which would be, 12 for me, but I'm gonna go ahead and do both. Here, at this point at 10:10, I think bulls will get out knowing the first reversal down. So either they get out or get back in because they know there's going to be a retest. So it's really both. They know that it's okay to hold. So let me answer it this way. Over here, bulls will buy and they're going to hold all the way down, knowing that trading range worst case, deep pullback, we're probably going to test the highs. So it makes a lot of sense to just simply you have a bull trend, bulls will hold, and they see a very disappointing trend line for 8 p.m. You see 20 gap bar, 20 gap bar. You can call it 20 bars, it really doesn't matter. The bears are able to get a close below the moving average over here, so probably a final flag. So yeah, they'll hold, and they're going to hold, they're going to hold, they're going to hold, and they'll get out back at their entry. And that's exactly what happened at the end of the day. So think about it. Bulls buy, they hold, they really want a leg one, leg two, but that's a lot of reward, so it's low risk and low probability. And then if they can't get, so they're a lot will hold, and most will just get out at these highs, realizing that this is not strong enough for leg one, leg two. Others will hold and take a chance, and they failed. So the more it keeps trying to get the breakout more up, the more traders will just begin to agree that it's just pausing at the highs and they're going to look to get out at the prior extreme. So I hope that answers your question. Okay. I'm afraid to delete. I don't want to do that. I don't know if I delete the questions one at a time. It'll delete everything, so I'm not going to do that. Maybe 10:15. Oh, okay, yeah, I hope that answers your question. And short term, yes, bulls. Traders who want to get out and buy again, they'll exit, but swing bulls, a lot of them, they'll just hold and they'll just wait. They'll hold until it's clearly always in short or until there's a retest. So another question. The 9 a.m. bull spike was so strong. We can expect a second leg up, so we can probably expect all bear attempts to fail. So buying the closes of all strong bars, buying the closes of all strong bear bars during the pullback is actually profitable. Yeah, okay, so what he's saying is it's the same it's the same, yeah. So when you look at a chart, always try and find, at this point, ask yourself what's the strongest thing on the chart? It's this bull move. Very tight channel, 15-minute chart, 5 consecutive bull bars. So it's a strong rally. Well, the bulls, they expect a second leg up. That's why they buy a breakout. So they know that any pullback, worst case, will probably lead to a trading range. So buying lower always makes sense. in a trading range or a trend. So they look. So why not buy when the bears are at their strongest? So they'll buy this close. They'll buy at the moving average, especially because they haven't gotten to since over here. Big bear breakout. It's a gift. It's like value traders. Why not just buy? Another bear bar, buy some more. Strong bear bar, late in a trend, just buy a lot. So yeah, I mean, to answer your question, yes, that's exactly what we'll do. Okay, another question, thoughts on buying 50% pullback of 9 a.m. bull rally later around the 12:30. Yeah, I think you mean 12:30 p.m. Yeah, I'm assuming that's what you do. Okay, so yeah, okay, so he's asking, what about buying 50% pullback? Well, trading range days, you expect the pullbacks of trends. 50% pullback, I believe it's a Fibonacci number, but if you really want to break it down, yeah, it's perfect one-to-one risk reward. So let's say I say, okay, here's the start of, here's the top, here's the bottom of the trend. I'm going to buy right at this price, put my stop down here for my reward up here. Well, math's excellent for that because it's a one-to-one in a 60% market. You more than likely have a 60% chance of making a profit, or at least being able to get out before you lose. So what are the odds the price goes all the way down to here before all the way up to here? Probably 60% in the opposite way. So what I mean is 60% chance we go up to here before we go all the way down to here. And when traders do that, they'll get out before it reaches down here. So yeah, it's very reasonable. Okay, so I think that's it for questions. Okay, maybe it's not. Well, hang on one second. Okay, so at 1300, so at 1 o'clock to 2:30, so 1 o'clock to 2:30 over here, it was hard to find buy entries, but since bears kept failing, it was actually a good idea to fade all bear attempts down. So again, buying closes of a strong bear bar is a good idea. Yes, that's exactly what's going on. The bulls, they see this as a trading range, this whole area right here. So the last thing they want to do is buy too high in a trading range. They know that's just not a great idea. So one way to, so they want to buy low. So they're going to buy pullbacks and not buy stop entries. So yeah, every bear attempt, they're going to buy it. So bear attempt, buy it, bear attempt, buy it, bear bar, buy it, bear attempt, buy it. So yeah, you're exactly right though. Okay. All right, that's it for questions, and that's all the time I have. So hope this helps. I'm going to post it on YouTube on my channel. So if anyone else has any questions, just ask in the questions or in the comments. All right, thanks. Everyone has a good night and a good trading day tomorrow.